Today is November 14th, and with the help of Mr. Jesse Baker, we will be doing a video update of our thoughts on the market and world economy. My name is Joe Terril, and I'm president of Terril and Company Independent Wealth Management in St. Louis, Missouri, with about $500 million under management. And Jesse, let's resign ourselves to the conference room, and we will give everybody an update. Thank you. Jesse, I'd like to remind our viewers that the transition in Europe from socialism to capitalism, democracy, more economic freedom is a major positive. I think the investment markets become discouraged thinking that this is something that's supposed to happen in 30 days' time. That's not going to be the case. It's going to take a little bit of time. In Greece, we've got progress. We've got a new government coming in. The new government understands what has to be done. In Italy, in the last few days, same thing. New government, new way of thinking. They get it. They understand that they are going to have to find a product, a service, something that they can sell the rest of the world in order to participate in a world economy. The idea that you can borrow your way into prosperity or spend your way into prosperity doesn't work. They understand it, and they are making progress towards this transition. To us at Terril and Company, this is a positive. It's an ongoing event, and it's going to take time, but it's very much a positive for the world economy. There is a thought process that some investors have that the transition will cause the banks in Europe to go broke, which will cause banks in the United States to go broke. That is not the case. We do not see that happening. Are there some banks in Europe that are going to have more problems than others? Yes. Is there debt that's going to have to be reconstructed? Yes. But I doubt very, very seriously if you're going to see major bank failures in Europe carrying on to the United States and Japan and other countries and causing, as some believe, a worldwide severe recession. We disagree with this. It is a problem, but let's remember the transition is a very good positive. It's underway. We see it happening, and they are, meaning countries in Europe, Ireland, let's throw in, on their own, is very much headed in the right direction. So with that said, let me state that there are some bargains in investments because we're sort of set up in a situation where many investors are selling things too cheaply. I think they don't understand that countries going broke and being forced to redo balance sheets and make changes is not new. It happened in the late 70s with Latin America. It happened in the early 80s with Brazil. It happened in the early 90s when Russia went broke and defaulted. The balance of the world has been through this before. This isn't something new that has an outcome that cannot be predicted. So investors and maybe the people that are predicting doom and gloom out of this, we don't agree with them. This, for us, is somewhat an opportunity, as we've mentioned in the last 45 days, to buy some investments at very reasonable prices, take advantage of the fear that people have that somehow this situation in Europe is going to end up destroying the world economy. That's not going to happen. The world economy is doing okay. We saw yesterday some reasonable economic figures out of Japan about their economy. China is always a major question, but in general, the balance of the world's economy is okay. This thought, again, that Europe is going to cause the balance of the world to tumble into a severe recession, there's no evidence out there right now that any of that is happening. If anything, it's exactly the opposite. We've made the comment, I believe, in written form and on some of these video updates before about the fact that there is 400 to 500 million people around the world attempting to move into a middle-class lifestyle. Those people are not going anywhere, and the demand that those people create is not going to disappear. People in Southeast Asia that are demanding cell phones, internet connections, choice of clothing, more protein in their diet, they're not going to stop that because they're worried about what Italy is going to do and who's going to run the new government in Italy and if they're going to balance their budget or not. They could care less about that. That intrinsic demand around the world is out there, and you see it in the economic figures that continue to be very solid, and we expect this to continue. We do not believe that Europe is going to drag down the world economy. We expect somewhere in a 4-5% real growth in GDP for the balance of the world ex-United States. In the United States, we think 2% to 3% growth in GDP is what we look for. So just want to get across to people that the world economy is in much better shape than certainly what the media headlines would have you believe. And the future, we think at Terril & Company, is a little brighter than certainly what some people predict due to the budget problems in Europe. Let's talk about investments for a moment. We continue to believe at Terril & Company that you can buy income at a very reasonable price, taking advantage of the fact that people are concerned that banks all over the world are going to go broke. Buying bank debt, bank preferred stocks is a good idea right now. Many of these yield 8% to 9% income. We will take that income because we feel very strongly the banks are not going broke. 8 to 9% income is a pretty nice rate of return if we sit there and hold it for a couple of years. We also see many companies that do business all over the world reporting very good sales, earnings, and outlooks. Cisco recently gave a presentation and said, as it relates to internet equipment, etc., that they don't see any major slowdown. Yes, they see more competition, but they don't see a slowdown in demand for their equipment. Emerson Electric, which is a company here in St. Louis, had a very optimistic outlook, sell products all over the world. So we have heard from enough companies that we're very pleased with corporate profitability. Most companies around the world, by the way, remain lean and mean and in very good shape to make good profits and be able to pay reasonably nice dividends. We do not see a 10-15% fall in corporate profits as some people are predicting. Therefore, as investments right now, stocks offer reasonably nice value. Certainly better value than bonds. Bonds that yield 2% by definition are selling at 50 times earnings. You can buy quality stocks all over the world at anywhere from 10 to 15 times earnings. With corporate profits doing as well as they are, this is the area that we're looking for to make nice returns for our clients and we think we will get nice returns off these companies over the next couple of years. Jesse, thank you for your help. My name is Joe Terril, and I am president of Terril & Company in St. Louis, Missouri. For a little over 30 years, we have very successfully managed money for our clients. We hope to continue to be able to do that for any number of years in the future. And appreciate you tuning in. And if we do not do an update before Thanksgiving, very best wishes to everyone for Thanksgiving. And I'm sure, Jesse, we'll be back before Christmas, I assume. You're staying in town for the holidays or going out of town?
Likely to stay in town.
Okay. Well, good. Then we'll see everyone probably sometime in December, or as activity in the marketplace would call on us to do an update. Thank you.